Bitcoin soars past $13,000 for the first time. The largest cryptocurrency by market value was selling for less than $1,000 at the start of the year. In recent days, several exchanges have come out with news on offering Bitcoin futures. Joining us now, Coinbase CEO Brian Armstrong. Coinbase is an online platform that allows users to buy or sell Bitcoin by connecting with their bank accounts. It has almost tripled its user base this last year, now standing at 13 million. So a wild ride, especially in the last few weeks. What do you see happening with this surge? Where is it going?
Well, there's certainly been this big influx of new interest in digital currency. Part of that has been driven by institutional money getting really interested in the space. So we've seen most of the large derivatives exchanges out there, CME, a number of others, starting to say they're going to list Bitcoin futures. And so that's driven a lot of interest. It's a big signal that traditional financial institutions are now starting to move into digital currency.
What is the CBOE, CME, NASDAQ, them trading these contracts? What does that mean for you? Does that create new challenges?
Well, number one, it's just a big endorsement of the digital currency space, as this is a real asset class that more and more players are going to trade. But I think for us specifically, what it means is that we offer spot market data to a number of these providers, or we're discussing it with them. We run the largest institutional exchange in the United States called GDAX for digital currency. The other thing is that we are offering a custodian product where a lot of institutional investors need a secure way to store digital currency on behalf of their LPs and their clients. And so we launched a product recently on that for Coinbase Custody. So those are the ways that it might influence our business.
Are you at all worried, though, that your clients might decide to go work with traditional mainstream Wall Street companies rather than Coinbase?
Well, I mean, I think it's certainly an option. Like, there's going to be more and more people involved in the digital currency space. Like, we're not going to be the only ones. And so I think that's a good thing. Like, there's just going to be a diversity of players out there. There's going to be a lot of winners. But digital currency is moving so fast that I do think a company dedicated to it with 200 people who've built up this industry knowledge over the last 5 years is going to have a sustainable competitive advantage.
Now, we have to talk about customer service. You've been experiencing a glitch, as you have with prior surges. Why does this happen? Yeah,
well, I mean, in a word, it's hypergrowth, right? We've hired from about 40 customer support agents to about 220 or so this year. And I think by the end of next year, we'll have another 400 or so. And so we're
in addition to the 200 that you already have?
Yeah. So, and we also launched phone support this year. So we are going through this period of growth that is almost never seen in business. You know, it's really difficult, to be honest, to keep up with this amount of demand, and we're not servicing our customers to the level that they deserve at the moment. So that's really frustrating to see, but it's my job from the top to ensure that we're going to get there.
But can you explain a little bit more about why it happens? Like, is it a glitch? Yeah. Is it a crash? What's actually happening technically?
Oh, no, I mean, it's just a huge influx of new customers. So, you know, our volumes, whether you look at it as trading volume, new signups, everything, it's gone about 8x since June of this year, which is just unheard of. So it's really difficult to plan for that kind of capacity.
So it's literally that you don't have enough humans behind the scenes to receive all of these complaints?
Correct.
So, you know, in addition to hiring new people, is there anything else that you can do?
I mean, certainly we can always improve the product, right? I mean, improving the product is a way to reduce the number of customer support tickets that are coming inbound. So, you know, the team is working really hard on that. The kind of key metrics we look at are around, you know, uptime, NPS score, average time to customer response. Those are the core metrics we're looking at to ensure that we're meeting our customer demands at this time.
Do you have any concerns that this will decrease trust among your customers? Is that new customers, you'll lose new customers as a result of this?
You know, honestly, I do have that fear, yeah. I think that it's really difficult to go through a period of this rapid growth and maintain the same level of service. And we've been watching those metrics, and they're not where we want them to be. So, you know, growth is a really high quality problem to have, but it doesn't mean it's not a big problem. And I think especially in financial services, we're held to a much higher bar than, say, like the Twitter fail whale or something like that. I mean, we're storing people's money, and I think people are right to call us to a higher standard.
The IRS has been asking for more information about your holdings and your profits. What are you hearing from your clients about this?
Yeah, well, the IRS sent us a subpoena for a large number of customer records, in fact, all customer records, over a several-year period, which was pretty unprecedented. And so we did push back on that really strongly. We took it to court. The judge, I think, gave us a big vote of confidence, and they reduced the scope of the IRS request by 97%. It wasn't down to 0, which is where we think it should have been for something that broad, but it was certainly a partial victory. Now, I think if you look long term, look, we want to help people pay all their taxes on digital currency gains. What I think this should look like is something kind of like Fidelity or Charles Schwab, where everybody gets 1099 statements. The IRS gets a copy, our customers get a copy. It should be that simple. We're working with the IRS now, thankfully, to make sure that we come up with some kind of a solution where everyone's going to pay their taxes. But this is one of those new areas. Technology keeps finding a new box that doesn't fit into the existing framework quite perfectly, and we need to work with everybody out there to make sure we get there.
Given the uncertainty currently, as you work this out, are you giving any advice to your clients about how to report their gains to the IRS?
So, obviously we try to stay away from any sort of tax advice since that's not what we do. But we do provide a report to our customers, a cost basis report that they can export and send to their accountant. So that's the solution we have in the interim until there's something like 1099s or 1099s themselves.
Let's talk about what's happening with some of these other cryptocurrencies, Ethereum and Litecoin. You can trade on Coinbase. What do you see happening with Ethereum versus Bitcoin in the future?
Well, they've sort of evolved down different paths. Bitcoin used to be 95% of all the market cap of digital currency, and it's come down quite a bit. I think something maybe to 50 or 60%. And so Bitcoin is ending up, in my mind, being a little bit more like digital gold, if you will. It's kind of the oldest digital currency. It's the one that people flee to in times of uncertainty. But it hasn't scaled to become, for example, a payment network with the sort of transaction throughput that people might want. So Ethereum has kind of grown to do that, and Ethereum is now doing more transactions per day than Bitcoin. Ethereum also has this really innovative new concept of smart contracts, and so it's much more programmable than Bitcoin. Bitcoin you could think of as a simple 4-function calculator. You can send A to B or subtract B to A. Ethereum is almost like a programming language where you could write any software and run it on this globally decentralized computer. So that's kind of a mind-bending concept, but let's just say that Ethereum is higher throughput per second as a transaction network, and it's much more programmable.
You have launched a new app called Toshi, which seems sort of like an app store for Ethereum. Explain what you're trying to do here.
Yeah. Well, the analogy I like to use is of the internet. So when the internet started, you had TCP/IP and Usenet, and it was really difficult to use. And then a browser came out on top of the internet with Netscape, and it made it easy for anybody to build an app and also access the internet. So we're doing the same thing with Toshi. Toshi is, you could think of it as a browser for the Ethereum network. And we're trying to make it really easy for any developer to build an app and any consumer to actually use applications on the Ethereum network. And honestly, we're a little bit inspired by things like WeChat and in China, and Paytm in India, even M-Pesa in Kenya. Like, mobile money is a really big deal, especially outside the United States. And I think that people in emerging markets could actually use digital currency to start to get access to financial services through something like Toshi.
So when it comes to the price, how do you see Bitcoin versus Ethereum playing out? I mean, do you see the Bitcoin spike continuing? Do you see Ethereum surpassing Bitcoin, as some have suggested it will?
Yeah. Well, of course, I never want to be giving any investment advice, but I mean, just in broad strokes, the way I think of it is that Bitcoin does have a certain amount of guaranteed scarcity built in. There's only ever going to be 21 million coins. And of course, if something's more scarce, the price can be driven up. Ethereum has taken a different approach, which is that there may be a moderate inflation curve, almost like the US dollar. They might target 2 to 3% inflation a year. They're actually still deciding exactly what it's going to be. So Ethereum's not trying to be gold, which is what Bitcoin is. It's trying to be something more like a payment network or something more programmable. So that all factors into what the price will be. I guess one other really broad thing you could look at is just where are the users going, and where are the developers building the new apps. I personally see more developers building apps on top of Ethereum today. So that's one other factor which could point to what it might be in the future.
We talk about this a lot on Bloomberg, whether, is Bitcoin a fraud? Is it not? Are we in a bubble? Are we not? If it's not a fraud, is it a bubble? What do you think?
Well, I mean, I certainly don't think it's a fraud. I mean, is it a bubble? Maybe. I mean, digital currency has gone through a number of these periods where there's a big run up and then it'll correct back, but you're at a new plateau each time it goes up and it kind of comes back a little bit. So I think we're going through the most recent run up period. It's probably the fourth one we've been through as a company. And I would expect it to correct back at some point, but continue over time in an upward channel.
There's an update to the Bitcoin network called SegWit, which would speed up transactions. You guys haven't implemented that yet. Do you plan to, and when?
Yeah, it is one of the things we're looking at adding. It's probably not in the top 5 next things that our customers are requesting.
What are the top 5 next things?
People want more assets on the platform. They want a better experience, meaning like identity verification, higher limits, the sign-up onboarding experience. And then they're asking for these new products. Like our institutional customers are asking for a custodian product. People are looking at a way to just trade more assets, have a better experience, and store it securely.